Attention, all resellers, flea market visitors, classified ad browsers, and of course, people who also buy commercially on eBay. If your business model consists of buying things to resell them later, especially used items, whether it's furniture, cars, collectibles, Pokemon cards, or whatever. And if that's your business model, meaning you're self-employed with it, then you know a problem. And the problem lies in the value-added tax. Because as a regular self-employed person, as a normal business, you can buy and sell goods. And normally, for the purchase of goods, you receive an invoice. And in this invoice, the value-added tax is listed. And then you sell this product, for example, a sneaker, you eventually sell it for more. Let's take an example. You buy a sneaker for 500 euros and sell it for 1,000 euros. Normally, you then have the incoming invoice. Regular invoices with value-added tax shown. And of course, you also write an invoice with value-added tax for your sale. And in the VAT pre-declaration, you then calculate the VAT from the sales revenue minus the VAT from the purchase of goods. And that is the VAT amount that you pay to the tax office. So simple. But if you are active in this industry, you will now say yes, but that is only the theoretical case, because purely. Practically, I mainly, and generally speaking, buy from private individuals. And as a result, you typically don't have a proper invoice on the goods purchase side because private individuals typically and usually do not issue invoices. They also, generally speaking, do not show VAT. That means, let's take the example again. You buy a sneaker for 500 euros from a private individual. You have to pay the money, but you don't get an invoice. Ideally, you get some kind of receipt and a confirmation of receipt for this money, but you don't have an invoice with this VAT shown. And then you sell this sneaker, as in the first example, also for 1,000 euros. And VAT is due on that. This means in your VAT advance return, you would now have to report the sales revenue from the sale to the tax office and could offset it. Nothing at all, because on the purchasing side, you don't have a proper invoice. And this is, of course, a huge problem for the business model of reselling because you end up paying significantly more VAT than the legislator actually intended. And VAT has already been paid for this sneaker. That means it was probably sold at some point by a store to these private individuals. And VAT was already incurred there. And then he sells you this sneaker. You then have no VAT options and end up paying VAT again, so to speak. This means that ultimately in the value chain, there is a double taxation for VAT. And the legislator does not want that. The tax office always wants money, but at least in this case, they don't want that much. And that's why there is a tax simplification method for reselling. It's not entirely simple, but if you want to become self-employed in this area, you absolutely need to know it. And this simplification method is called margin scheme taxation. This margin scheme taxation is regulated in paragraph 25A of the Value Added Tax Act. And this is important. I'll mention it here already because you will need this paragraph 25A to write on your future invoices. And with margin scheme taxation, the entire process runs a bit differently. You no longer pay your VAT on your sales revenue, but essentially, in essence, basically on your profit margin. Let's stick with the sneakers. Purchased for 500 euros, sold for 1,000 euros. So now you pay the VAT not on these 1,000 euros, but on your markup. You added 500 euros to these sneakers, which means you pay VAT on these 500 euros. And these 500 euros are also the gross amount. This means you have to calculate the VAT out of these 500 euros. You do this by calculating the profit margin, so 500 euros divided by 119 times 19. And this then leads to the fact that through the differential taxation, you no longer pay 190 euros in VAT, but you pay 7,043 euros in VAT. That means significantly less. And ultimately, one can say the lower. Your profit margin is the greater the advantage of differential taxation, because the tax base is simply lower as a result. For this to work and for you to be able to apply differential taxation, you must, of course, document everything very precisely. Because now it's no longer enough to just somehow collect all outgoing and incoming invoices. And at the end of the month, somehow calculate and sum them up. But now you have to calculate exactly how much profit margin you actually have on which products. And you must document this precisely because otherwise you won't be able to offset the VAT at all. This means you absolutely need software that can handle all of this. This means you need software where you can record the purchase of goods in the accounting so that the software can then determine this profit margin for you and calculate the VAT for you. Because this differential taxation, that is this VAT from differential taxation, is also listed in separate fields in the VAT advance return. And the problem there is there aren't particularly many software solutions. that can do this. I have extensively researched this, and normally I mainly recommend Lexware. Good alternatives are, for example, Safedes or Accountable. And you can forget about all of them because none of them have the capability to calculate differential taxation. And the only tool I can recommend to you is Orgamax. Feel free to check out Orgamax, I'll also link it below for you in the video description. Differential taxation is, financially speaking, a simplification for resellers. However, it also means that you are significantly more limited with the software. Nothing against Orgamax. I find Orgamax from the first impression great, and I also know 2 or 3 people who have their reselling business completely under control with it. But you should definitely take a look at your sales there, because differential taxation means not that you can now account for all your sales in the same way, but you can apply differential taxation when the goods are purchased from private individuals, meaning you buy the products from private individuals or from other resellers who choose this differential taxation. You can recognize this by a note on the invoices about this differential taxation, i.e. by 25A of the Value Added Tax Act is mentioned. And if this is the case with the seller, then you can apply differential taxation yourself. However, if you generally trade, you will occasionally purchase products from a company. And then, of course, you receive a proper invoice for this purchase of goods, and you then tax that normally. That means if you decide on a software, you always have both in parallel, unless you very actively decide to always purchase privately. So for example, if you love going to the flea market every weekend, and you buy at the flea market and then sell it online, or again at the flea market, but with a small markup, then you usually don't get an invoice for that. And then you can also apply margin scheme taxation to your entire business. In most cases, however, it's more of a mix, and you need to clearly separate all of this in your accounting. I think it can be summarized by saying that with margin scheme taxation, you really need to document everything clearly. You need to document everything in such a way that later, at some point, auditors in 5, 6, 7, 8 years can actually look at it and still trace which sneaker you bought and sold, what the markup was, and how you arrived at this VAT amount. Therefore, of course, you could theoretically do all of this in Excel. However, I can't recommend it to you because it usually leads to chaos quickly. One important note at the end of this video. Namely, when you apply margin scheme taxation, you typically don't have an invoice on the goods purchase side. At least have the receipt of payment acknowledged. And on the sales side, you do write invoices because you are self-employed. However, you write invoices without showing VAT, but with a note on the margin scheme taxation according to paragraph 25A of the VAT Act. And then that's all fine. And with that, I hope I was able to give you a good first small insight into the whole topic. Margin scheme taxation. If you have any questions about it now, feel free to let me know. Because I can imagine that there are a few questions, since honestly you don't come across this rule all the time. But for the small area in which you might be active, it's an incredible tax relief. And if you need tools, help, a tax advisor, if you say, I don't want to do this myself, you need a bank account, whatever, as always. All of them. My recommendations are linked below in the video description and also once again here. And now you can simply watch another video. We have a few hundred to choose from. For example, this one here or this one here.